Hi everyone, Joe Vitale, American Retirement Advisors, with the Great Investments Weekly Talking Points for the week ending April 30th, 2021. Let's talk about some stocks. Now, earnings report season is in full swing with 60% of the companies in the S&P 500 reporting actual first quarter results so far. 86% of the S&P 500 companies have reported a positive earnings per share surprise. The estimate earnings growth for the past quarter was 23.8%. Now at the end of March, but the blend of actual earnings growth reported so far plus the estimates for those which have not yet reported is 45.8%. Now the S&P 500 reached a record high last week, ending with 0.04% gain. The Russell 2000 eased down 0.23%, and the Nasdaq, also having reached a record high during the week, finished with a 0.38% decline. Overseas, the international developed markets, which is the EFA, declined 0.74%, and the emerging markets weakened by 0.37%. Energy and communication services were the best performing sectors in the U.S., while the technology and healthcare were the laggards. Let's talk about some fixed income. Interest rates rose as well as values fell, with a 10-year Treasury yield rising 7 basis points to the end of the week at 1.65% after a strong GDP report, and the Federal Reserve assured that they will respond with higher interest rates when inflation proves to be more transitory. We are seeing that right now as well. We're starting to see a little bit of interest rate talk, as well as those going up, as well as inflation numbers, which they say it's not going to happen. It is happening. Okay, so let's be aware of that. Let's talk about commodities. Oil prices rose last week on an improving outlook for global demand as the major economies appear to be in recovery mode from the pandemic. Right? We see that. Everything's opening up. We got 74% vaccinations, which is, of course, everybody's feeling better about that. So things are opening up. People are spending money. People are out there. Yes, we should see a strong year with that in mind. The price of West Texas crude rose 2.3% last week to $63.58 per barrel. However, there are still concerns over higher supply from OPEC after they decided to continue with their prior plan to boost supply slightly beginning this week. We are seeing 2.7 or $2.90 per gallon right now at the pump, so we're seeing that. Economic data. First quarter economic growth. The GDP in the U.S. was 6.4% on a quarter-over-quarter basis, annualized, just a hair shy of the recent consensus estimate. Growth was led by a 10.7% increase in consumer spending and a 6.3% hike in government spending. Now, personal income jumped 21.1% in March, while consumer spending grew 4.2%, well ahead of the 1% spending decline in the prior month. The personal savings the rate jumped 27.6%, the highest level in over 60 years. And the growth rates were driven by, guess what? Government payments as part of the COVID-19 relief efforts. Since the monies were distributed in March, core inflation was 1.8% on a year-over-year basis. So because of all the stimulus checks going out there and all the money going out in the economy, yes, you're seeing personal savings has grown, which is not a bad thing. Now, April's survey of consumer sentiment was 88.3, a 3.4% gain from March, showing continued monthly gains due to rising confidence in the momentum seen in jobs and incomes. This is due to record federal stimulus spending, both recently passed and proposed, as well as positive impact from the rollout of the COVID vaccines. Now, orders for long-lasting durable manufactured goods in the U.S. rebounded last month, but grew slower than expected, weighed down by a global chip shortage and weaker demand for commercial aircraft. What you're seeing too is you're seeing a lot of cars which are delayed right now because of the chip shortage. It's really everywhere right now, so it's actually impacting everything. Now, orders rose 0.5% versus February consensus expectations of a 2.3% gain, but when transportation is excluded, orders rose 1.6% in line with consensus estimate. Let's talk about companies. Apple, a G33 and Core Select Holding announced revenues and earnings that beat expectations and guided full-year revenues ahead of estimates. Management also accelerated its capital spending plans to $430 billion across the U.S. during the next 5 years. The board authorized a 7% dividend increase and added $90 billion to their share buyback program. Shares declined 2.1% for the week. Facebook, a G33 and Core Select Holding, reported far stronger revenues and earnings than expected as ad revenues rose 46% and other revenues gained 146%, boosting operation margins by 10%. Shares rose 7.8% for the week. And UPS, a G50 holding, reported revenues and earnings that far exceeded expectations, including volume growth of 14% and earnings per share growth of 141%. Shares rose 13.9% for the week. That was it. That's a long summary for you this week. We hope you're doing well, and we're very thankful to have you part of our family. God bless you. And of course, if you have any questions, give us a call. 855-756-5700, or visit us at aradvisorsinc.com. Have a great week. We'll see you next video.